Hey Insurance, this is Tony Cañas, Chief Motivational Officer at Insurance Nerds and PNC Client Advisor at the Jacobson Group. Today I want to talk to you about the real cost of burnout and turnover in a hot talent market like what insurance is living through today. Lately, we've been hearing a lot about the Great Resignation, within insurance about the Great Reshuffle. As the overall economy riles in a worker shortage and insurance continues to have very low unemployment and many retirements, many companies are finding themselves seeing higher turnover than they're used to. Worst of all, some companies seem to be okay with that turnover because it saves them money. After all, if they were able to get the work done without those people, why should they replace them? That appears to have become the motto at some companies. This is the epitome of short-term thinking, and it will lead to burnout and to higher labor expenses in the mid and long term. Let's say that you run a department of 50 insurance professionals making an average of $60,000 a year. They're licensed, but they're not a super specialized skill set. Maybe let's say personal line CSRs or small commercial account managers. Historically, they stay around for a long time, and your turnover, let's say, is 6% a year or about 3 people per year. This year, with all the crazy stuff going on in the economy and the pandemic, you might lose 10 people instead of your usual 3 people. Let's say 2 retired earlier than planned and 8 were poached and took remote jobs at competitors without even having to geographically move. They also got significant raises because the talent market for insurance professionals is super hot. Since hiring is very hard right now, and you can't seem to find licensed people with the usual 3 to 5 years of experience at $60,000, maybe you're also forcing them to come back to the office. Maybe your candidates keep choosing remote opportunities instead of yours. What used to be 30-day vacancies that your recruiters could easily fill are now turning into 90 and 180-day vacancies. And you start realizing, you know what? The work is getting done. Why should we replace them? Well, yeah, the work's getting done because your remaining people are overworking. If the same amount of work still needs to be done, and now you have 10% less people, your people are probably having to work 20% harder in order to get all the work done. And unless you're going out of your way to give them significant raises, chances are they're going to burn out. They might burn out even if you're giving them big raises. A person can only work so much. You're likely going to start losing even more people and even some of your best people. At some companies, you might even be thinking of this as a savings. There might even be a spreadsheet where those missing 10 people are showing up as a $600,000 savings in salaries this year, 60,000 times 10 people. But those spreadsheets aren't counting the burnout, and they also aren't counting the fact that in a hot talent market, in a hot insurance talent market, it's actually going to cost you 20 to 40% more than it used to replace those people. In other words, the average salary when you finally do manage to find replacements will probably end up coming in around $80,000 instead of your old $60,000 average. Basically, that illusory $600,000 in savings in the spreadsheet is actually $200,000 in extra expense in next year's budget. And again, that doesn't even take into account the death spiral that can happen from burning your people out. So what can you do? Well, number one, sincerely let your people know how much you appreciate their hard work and that you recognize their pain, and that you will do everything you can to alleviate the situation as soon as possible. Number two, offer some sort of compensation for the extra work. Number three, seriously consider bringing in temporary help to ease the pain. This is exactly the service that I sold for Jacobson. I'd be happy to have a conversation with you about how we can help. It's not cheap, but it can save you a ton of money. It can save you a ton of burnout and a ton of money in the long term. More than anything, my purpose with this video is just to open your eyes that burnout is real. I keep getting calls from people about how they're burning out. It's real and it's expensive. And for each person that you lose and you don't replace quickly, you're increasing the level of burnout that your people are suffering, and the bill will come due eventually. And in a hot insurance talent market that's giving no signs of cooling down, the bill will be significantly more expensive than you plan for and significantly more expensive than you think it will. I see this most often in service areas and in claims. Thanks for watching today. I hope this was helpful.